which is on Monday, Wednesday, and Thursday, and Group B, which is on Tuesday and Thursday, 2 hours. Okay, before I start the course material, would you like to ask anything? Would you like to ask anything? Okay. So did you attend the classes in last 2 weeks with the group one? Are you guys, did you attend the class? Did you manage to attend the class?
Yes, ma'am, I did.
Okay. So did you cover the slides? Balone, did you attend the class? Botsang?
Yes, ma'am.
Okay. And any class activity have you done with the other lecturer? Any class activity have you done in past lessons? Or we need to start with class activity 1? I'm just asking so that I know that from where I have to start with this group.
Can we please start from the activity, ma'am?
Activity 1.
Yes, please.
Okay. Okay, let's just recap about the partnership. You know that partnership is just a form of business organization where the ownership are shared by the member of people who contributed in the raising the capital. It is because accounting, when we say accounting, accounting is just a procedure of recording business transaction. Either it is run by the sole trader or partnership or limited company. The format of preparing the income statement and statement of financial position is standardized according to the International Accounting Standard Authority or board. But when it comes, the utilization of profit, how the profit has to be used or shared among the owner, then we need to prepare some additional account. Those are the account which is more important and more essential for the partnership accounting. Because here the ownership is shared, there should be minimum 2 people, maximum up to 20. So how many partners are there? They have to agree in written. How are they going to share the profit and loss, in which ratio, in which percentage, 20%, 30, once they generate the profit. If any other partner contributing more, they are also entitled for the salary. So if the salary has to given to the partner, from where it has to be paid. If the partners, the owners withdraw some money, how to record the drawings, and to discourage the partners to withdraw the money, they always charge some interest with a reasonable rate, either 10%, 20%, sometimes 30 to 40%, so that the partner should not be encouraged to withdraw money from the business for personal use. So if there is any interest has been charged, how to record that interest to each partner and other benefits. So when we are thinking about partnership accounting, we mainly prepare four types of account. The first one is financial statement, including the income statement and statement of financial position. The second document is called profit and loss appropriation account, where we share the profit and loss of the business. Yeah, and how the profit has been shared and utilized by the among the partner. We talk and then we prepare the current account. The capital account is depend on what method we are using. If we are using the fixed current method, then the capital doesn't change in the capital account, but the current account shows that current means recently at the moment. So in that situation, we have shown that how much the portion or how much the ownership each partner has in the partnership accounts, like in terms of having the salaries, bonus, commission, payment of interest on their invested capital, etc. We indicate all those details in the current account. And the last account we prepared, the goodwill, partnership goodwill account, where we indicate how much goodwill has been created by that partnership firm and how that amount is going to be utilized. So these are the basic account, but we income and statement of financial position is just same like a sole trader as we did in a manufacturing account. So we are not highlighting more on preparation of income statement for the partnership firms, but we can talk about the profit and loss appropriation account for the partnership. Just a moment. Hello, afternoon. Yeah, okay. Yeah, they can come. Yes. Okay, thank you. So we are going to start with the partnership appropriation account, and for that we will start with the exercise number 1 and then do all the exercise. So I'm going to share the document. Can you see the question, class activity? Can you share the class activity?
Yes.
Okay. So sometimes the information of the partnership firms has been given in this order, like question number 1, class activity 1. Uh, X, Y, and Z are in partnership with the capital of 480,000, and for Y 400,000, and for Z is 32,000, but it's deficit. When it's a debit balance, means it's a deficit balance, respectively on 1st of April 2015. They share the profits in the ratio of 2:1:1. Their partnership deed provides the following detail. The partners are to be allowed interest on capitals at the rate of 5% per annum and are to be charged interest on drawing at the rate of 6% per annum. X is entitled to a remuneration of 10% of the net profit for customers' relationship work. Y is also entitled for commission of 10% of the net profit after charging remuneration of X as per the clause. Clause means because they agreed in the partnership deed what to do. So in the partnership say they will get the commission, but the salary will be first paid at the first place. So that's what mentioned in the partnership deed. So that's why they say the remuneration of X as per clause 2 above. So after remuneration means the salary and wages. Okay. Z is entitled to a rent of 400,000 per month for the use of his premises by the firm. So the third partner, he give his building to run the partnership firm. So he entitled to get 4,000 pula per month as a rent. During the year, X withdrew 800 at the beginning of the month, Y withdrew 1,200 during the month, and Z withdrew 1,600 pula at the end of the month. The net profit for the firm for the year, which is ended on 31st March 2016, before providing any of above clause was 444,000 pula. So that was the net profit the firm earned during that financial year. Now, on the basis of given information, you need to prepare profit and loss appropriation account for the partnership firm. So the format is same as we discussed on the slide. Either, as I said earlier, when you are preparing the profit and loss appropriation account, you can use any one of the format to prepare the account, either horizontal form, where side by side, one side we mention the profit, then from other side we deduct the payments are made to the each partner, or we can also make the appropriation account in a vertical form. Vertical form means from top to down. So we start with the amount of net profit, then whatever the payment has been done, we deduct those payments from the net profit. So you can draw a table for the profit and loss appropriation account. In between, you can read that details of the business, and we always start by net profit, the net profit given as per the income statement, right? So everybody first draw the table with 3 columns, 1 for details, number 2 for amount, sub addition, and the last column for the final amount. So we'll draw the table. When we are making the profit and loss appropriation account, you no need to worry about the dates because it's always prepared at the end of the financial year. So we no need a date column there. Everybody has drawn the table. Okay, so the first column, you will write the heading on the top. Profit and loss appropriation account, right? And the first column for the details. Are we all together? Are you also writing?
Yes, ma'am.
Okay. Yeah. So we start by net profit as per profit and loss account. So how much profit is given? The net profit of the accounting firm for the year ended is 444,000, right?
Yes, ma'am.
So we will write that amount in the last column. Okay, then after this net profit, what we are going to pay first? See the question. Read the question, what we are going to do first. Okay, so first thing it says, the partnership did provide the following arrangement. Partners are to be allowed interest on capital at the rate of 5% per annum. So how much capital has been provided by each partner? Then we will charge first the interest on the capital. X has provided 480,000, Y 400,000, and Z 32,000, right? So first of all, we will enter the capital you will charge interest on capital. So because X and Y only have the surplus balance, but Z does not have the surplus balance. That's why we charge only calculate the interest on capital for X and Y, right? So can you calculate 5%? 5% of interest. 5%, 440,000. So how much interest on capital for X and for Y? Let's quickly do it. Interest on capital for X, 5% of 440,000. 480 times 5 is 24,000. So you will write amount here, 24,000. Same you have to calculate for Y.
20,000.
So for Y is 400,000, 20,000, right? So the interest on capital for Y is 20,000 and for X is 24,000. So the total interest on capital is 44,000. That amount you will write in the first column. Okay. Then what other provisions are given there? So part capital at the rate and then X is entitled for the remuneration of 10% of the net profit for customers' relationship work. So you have to calculate the salaries of X. How much is salary for the X? It says how much? 10%, okay. X is entitled for the remuneration. Then you write next, the second item. The ration. So when you are calculating, you subtract the interest on capital as the clause mentioned in the partnership. You subtract. Remuneration for X, partner X or you can say is okay. So when you are calculating, you will calculate like that: the profit of the business minus and the interest on capital, which is 44,000. So you subtract that amount and then times 10% of it. Because the partnership says that you should deduct the interest because they provided the fund. So on those funds, the interest has been paid. You subtract this one first before we make any other payments. So the 10% of it. So how much the remuneration for partner X? It will be 44, 400,000. 10% of 400,000 is 40,000. Okay. Then what's next? The question saying X is entitled for the remuneration on the net profit of customer relationship. Y is also entitled for commission 10% of the net profit after charging the remuneration to X as per the clause 2. Okay, so when you are calculating the commission for Y, do we need to subtract the salary of X or not? What do you think? Do we need to subtract?
I think we need to subtract.
Sorry?
I think we need to subtract.
Yes. How much you have to subtract? What is the interest? So the commission for Y, just a moment. Okay. So the commission of is y. Just a minute, the keyboard is not responding. Okay, let's say y. So we subtract the 44. So our balance is 400,000 minus 40,000. So the remaining amount will be 360,000 on 360,000. How much the percentage of commission?
Commission will be
10%.
36,000.
10%, okay. So you can write like this: 400,000 minus 40,000, then at the rate of 10, 10%. So it's 360,000. So the 10% will be 336,000. 36,000 is the commission of Y. Okay. Then we are done with commission, remuneration, interest on capital. Okay, the thing is given here. The number 4 provision Z is entitled for the rent of 400 per month for the use of his premises by the firm. So if that rent is already charged as a expense in the income statement, is already deducted, in that situation uh, it's not clear it has to be paid again or it has been deducted before. So in the absence of any information, additional information has been provided. Z is entitled for the rent. We can also pay the rent here to the Z, but there are two methods. Like if it is not recorded before, it has to be deducted first from the net profit of the year, 44,000, and then it has to be stated in the income statement. But here the sentence is saying Z is entitled to a rent of 4,000 pula per month for the use of his premises by the firm. But they didn't give any additional information. The rent has been charged or not yet charged. If it is not yet charged, we deduct first from the net profit. But if it is not clear, we can also assume that this 4,000 per month rent has been already deducted from the net profit. So you no need to do it again. Now we are left with the interest on drawing at the rate of 6% per annum. So how much amount has been withdrawn by the partner? So at the down you have given the information. During the year, X withdrew 800 at the beginning of the month. at the beginning of every month, Y withdrew 1200 during the month, and Z withdrew at the end of every month. So you have to charge the interest, which is 6% per annum. So if X withdrew at the beginning of the month, it means you also need to include the first month of the year. It means he withdrew 12 months before. You understand this sentence? During the year, X withdrew at the beginning of every month. Y withdrew during the month or at the middle of the month. And Z withdrew 1600 at the end of every month. So how much the total amount withdrew by the X if he's withdrawing 800 every month? So how much amount? 800
8,600.
times 12, right?
Yes.
So 9,600. He withdrew 9,600. And on that amount, he has to pay the interest with the rate of 6%. So first of all, we will deduct all this amount from the net profit and see how much the remaining is left over. The profit to be transferred, profit to be transferred. Okay, so the total how much the total of it? 44 plus 40,000, 84,000 plus 36,000, 120,000. So we subtract 120,000 from it. So the remaining profit is 324. Now we add interest on drawing. Interest on drawing. So how much interest for X? For X is 9,600 times 6%. It will be
576.
576. Okay. How much for Y? Y withdrew how much?
Withdrew 1,200 per month.
1,200 during the month. So it means that in January he withdrew at the middle of January, then middle of February, March, April. So how many months? Okay. So I think it's 11, 1,200 times how many months? Y withdrew 1,200 during the month. So how many months you will calculate? Middle of January, February. It is also going to be 12 months. or 11 months, 11 months and 15 days during the month. Because the date is not mentioned, so we can just consider like during the month, so it's 12 months. So the total amount he withdrew is 14,400. On 14,400, the interest on drawing charge with the rate of 6%. So the interest on drawing for the Y is how much?
864.
864, okay. $864. And how much for Z? Z? Z withdrew at the end of the month. So when he is withdrawing at the end of the month, so he no need to pay the interest for March because he withdrew at the end of the March. So he actually withdrew 11 times during the year, right? For this year because he withdrew 1600 at the end of the month and his financial year is ending on 31st March. So for the month of March, he withdrew at the end. So he no need to pay the interest for the last month because it's withdrawn at last. So 1600 times 11, you multiply by 11. So the total withdrawn amount is 17,600. On that, he will pay the interest by 6%. So the amount of interest will be how much?
1,056.
Yes, 1056. So we subtract 1056. Okay, so now we add all these drawings and add with the remaining profit. So what is the total interest on drawings? 1056 plus 864 plus 576 is 2,496. We add and then this profit has to be shared among the partners. Just a minute. So total remaining profit will be 326,496. So this is the profit is going to be shared among the three partners in the ratio of 2:1:1. Okay. So we will write by, because it's transferred to the current account, so you can write to current account or to capital account. Normally we write to current account. Then current account of AX X. So 2 raised to 1 raised to 1 means 2 plus 1 by 4. So 326, 496 times 2 divided by 4. So X current account will have 163,248. Then for the Y,
81,624.
how much?
81,624.
24. And the same amount will go for Z, right? Because his ratio is also same.
Yes.
Yeah. So that's how 624. So all this amount will transfer to the current account of each partner to show their portion or proportion in the net profit. So that's how we prepare profit and loss appropriation account, right? Then after preparing the profit and loss appropriation account, then we prepare the current account and the capital account. I'm going to prepare a question which has all those kind of account so that you can see in the sequence how we proceed by each account in the partnership firm's accounting procedure. Okay, before we end up our lesson, would you like to ask anything? All of you have been collected your test script or seen the marks on the